Hello YouTube, this is the Average Investor here. I'm beginning this new channel on YouTube to help the average investor essentially determine which is the best uh, investment one can go after. Now I've been doing this for about a year now, and I decided to start some YouTube videos. And the first one I decided to start on is essentially sort of a review of a book I came across of the way Warren Buffett analyzes financial statements, written by actually his daughter-in-law. So the book that I found was titled Warren Buffett's Interpretation of Financial Statements, and I found this book actually while I was reading The Intelligent Investor. And in The Intelligent Investor, there was a footnote regarding Benjamin Graham's uh, work on interpretation of financial statements. So I have both of these books, but I decided to go on Google, and I found Mary Buffett's book. And I decided to do first review on this book. I decided this is perhaps more contemporary than Benjamin Graham's treatise on financial statements. So here we go. So this will be a general overview of the book. The next subsequent videos will be specifically targeting the various aspects of a financial statement. So in the book, Ms. Buffett described Warren Buffett's two major revelations for identifying excellent companies to invest in. One of the first revelations he discovered was um, how do you identify an exceptional company with a durable competitive advantage? And the second revelation he discovered was how do you value a company with a durable competitive advantage? So the first question, how do you identify an exceptional company with a durable competitive advantage? So she described Warren Buffett looks at companies that sell a unique product or a unique service or are low cost buyers or sellers of a product or service. And examples of this for a unique product would be Coca-Cola. Unique services are tax preparation services such as H&R Block, meaning one would think, which company would I go for tax preparation? People think H&R Block. So it's sort of a unique service. And Walmart, of course, for a low-cost buyer and seller of products and services. So the second point, how do you value this company? And that's what this book sort of delves more specifically on. Looking for, essentially, Warren Buffett looks for consistency more than anything else. He looks for high gross margins, companies that carry little or no debt, or those that don't have to spend large amounts on research and development, and the general trends of the company's earnings. And of course, she harps on, or she consistently speaks about consistency builds durability. And she said that Warren Buffett essentially goes entry by entry on the financial statements. He doesn't exactly just look at it and says, "Oh, good enough." He literally goes, sta- entry by entry. So, the first major entry, or is the income statement. So in the income statement, he's basically looking at the gross profit margins, the direction of the earnings, specifically companies with low costs for manufacturing the earnings, low research and development to make these earnings, low depreciation rate and comparing this low depreciation rate to the gross profit. He looks for companies with low interest payments because that usually denotes low debt loads, and of course rising net incomes. So after going through these various portions of the income statement, he then looks at the balance statement. She discusses the way um, Warren Buffett looks at, more specifically than anything else, the amount of cash a company has. So he looks at the amount coming from operations, and more specifically, he looks at return earnings. A good company will always have rising returned earnings. Um, this is something that I've actually begun looking at more closely at. Um, he also looks at rising inventories with rising net earnings and low expenditures on plants and retooling, and the amount of long-term debt a company has to pay. Increasing treasury stock, meaning buybacks, how much the company is buying back its stock, and of course return on shareholder equity. Lastly, when he goes to cash flow, he looks at companies, how much the company essentially is spending on capital expenditures, and he tracks bond and stock sales and repurchases. So this was a just quick general overview. In the next subsequent videos, I will go specifically over the income statement, balance sheet, and the cash flow, and the way Warren Buffett examines various companies when he looks at the financial statements and says, okay, is this at least a good company to go for before deciding? Thank you very much, and hope to see you later on. Thank you. Bye-bye.